Financial analysts explain that the recent upward exchange rate trend of the dollar has impacted many countries in the world, including Tunisia, as economies and commodity markets rely on the dollar. Data published by Tunisia's central bank shows the dinar is trading above 3.1 against the dollar as inflation rate accelerated in March to 7.2%.
This situation cannot be explained by the sole relation of the dinar to the dollar. The dollar dominates as inflation heats up in the world. The US Federal Reserve has an aggressive policy. It said it was lifting its benchmark interest rate by 0.5 percentage point and 6 times in 2022. It could go up to 0.75% in June. The interest rate could reach 2.2% by the end of 2022 and 3% in 2023. Now, most world economies are buying US dollars, which leads to pressure.
Economists say Tunisia was expected to reach an agreement with the IMF and receive up to $4 billion funding in dollars in April, but the country has not yet struck a deal with a Washington-based lender. Coupled with other problems, including the conflict in Ukraine, the Tunisian dinar is further exposed by the widening trade deficit. Imports of oil and grain products have continued to soar.
If Tunisia does not reach an agreement with the IMF, if the Ukraine conflict persists, and pressure on raw materials and energy products continues, leading to rising inflation, and finally, if the central bank is unable to increase the interest rate while it is pressured to finance the national economy, then the value of Tunisian dinar would be endangered and could lead to sharper depreciation against the dollar.
The president of the Circle of Tunisian Financiers warns that current economic woes could cause social and political unrest as millions of Tunisian consumers suffer from record inflation.
The sharp depreciation of the dinar against the dollar will lead to an increasing loss of the purchasing power of consumers. Under the current political instability and the lack of visibility in Tunisia, this situation could cause further social and political confusion.
Tunisia's public finances are facing another burden as the value of foreign debt has risen by around $323 million this month, affecting the balance of payments due to the depreciation of the dinar. To improve the local currency, the Tunisian government has been called upon to boost exports, encourage foreign direct investment, and ensure the success of the tourist season. According to the Economy and Finance departments, 34% of Tunisia's debt is in US dollars, while 54% of the debt is in euros. Analysts say the recent drop of the euro amid ongoing geopolitical tensions in Eastern Europe and the rise of the dinar against the euro could lead to a decrease in the country's public debt by the end of this year. Adnan Shawishi, CGTN, Tunis.